Hello, and welcome to this video on labour variances. We've got three labour variances to look at: the overall labour variance, the labour rate variance, and the labour efficiency variance. So first of all, the labour variance overall. It's the standard cost of labour for the standard output, subtract the actual cost of labour. Labour rate variance, so it compares the wages rate now. Got the standard cost of actual labour hours worked, and then the actual cost of actual labour hours worked. Labour efficiency, so were they more efficient or less efficient? Did they take longer or did they take less time? So it's the standard hours for the actual production at the standard rate, subtract the actual hours worked at the standard rate. Now, these are a lot more clearer once we look at an example now. So an example here, where the standard costs of producing 1,200 wall blocks are as follows. So the standard cost of labour, now remember the standard cost of the expected cost of labour, so they expected to pay £6 per hour. The standard time, the expected time they expected it to take would be 50 hours per batch. Now the latest results, now these are the actual results. The actual cost of direct labour was £5 per hour, so that's £1 less than the standard expected cost. And the actual time was 65 hours per batch, which was more than the standard time of 50 hours per batch. So it says, what are the variances for labour costs? So the labour variance overall is the standard cost of labour for the standard output. So the standard cost is the £6. So I've got £6 times the standard output, which is 50 hours per batch. Then the actual cost of labour, again, it's going to be £5 per hour, and it's going to be for 65 hours per batch. So now we work this out now. So the 6 times 50 gives us 300. So that's the cost for the 50 hours expected. And the 5 times 65 gives us 325. So the actual cost then was £325. So the actual cost is more than the standard cost, and it's £25 difference. That's £25 more. Now, if you do it mathematically, that would be negative 25. So the actual cost, which is the 325, is more than the standard cost of 300. Then it's cost us more, so it's adverse. So we're going to say it's £25 adverse for the overall labour variance. Now, that's made up of the labour rate variance and the labour efficiency variance. So first of all, we're going to look at the labour rate variance. So it's the standard cost of actual labour hours worked. So the standard cost was £6 per hour. So my standard cost, we've got £6. Then the actual labour hours worked were 65 hours. So it'll be times 65. Then we take away the actual cost of labour. So it's going to be £5 for 65 hours. And now we do the calculations. So we have our 6 times 65. This gives us £390. Take away the 5 times 65, which is £325. So you notice here, the actual cost is £325, whereas the standard cost was £390. So that's a difference of £65. And because the actual cost was less than the standard cost, that means it's going to be favourable. Now the labour efficiency variance. So how long did it take to get the work done? So we've got standard labour hours. Standard one is 50 hours. At the standard rate. And the standard rate was £6. Times the actual labour hours worked. So the actual labour hours worked were 65 hours. At the standard rate, and the standard rate was £6. So the calculation now, 50 times 6, this gives us a 300. And then we got 65 times 6, which gives us 390. So again, the actual labour hours at a standard rate was greater than the standard labour hours. So therefore, we got a difference here of negative 90. And because the actual was greater than the standard, it's going to be adverse. That's going to be £90 adverse. Now, we want to check we got it correct here now. So the labour rate variance, or the labour variance overall, is your labour rate variance plus your labour efficiency variance. So your labour rate variance, here we go up again, that was £65 favourable. And the labour efficiency variance was £90 adverse. So we've got a £65 favourable and a £90 adverse. We've got a net difference of 25 adverse. So let's just check now that that 25 is the same as a labour variance at the top, £25 there. So that goes just to show you that your labour variance is a combination of the labour rate variance plus the labour efficiency variance. So that's your video on labour variances.